You need to understand the bond market to better understand your investments. Yeah, bond market is something that actually prices everything, every asset class in the world. Like it's an umbrella over the other asset classes. It just tells you what's your money is actually worth right now and will be in the future, and how you can price your money into your investments. You can get a better idea by the Warren Buffett. Like he quoted once that interest rates to the stock market is just like the gravity to Apple. When the interest rates are lower, the gravitational pull on the stock market is also lower. So this just gives a basic idea of how the bond market actually plays in the life of the stock market, but it's not just a stock market that the bond market affects. Bond market affects all of the asset classes at a spherical and at a grand level. You need to actually understand this by the value of the dollar, like what you are trading for a financial instrument is dollar. When you are buying an Apple stock, let's suppose the Apple stock is available for $200, and you are just giving $200 to the seller for an Apple stock. Now you got the Apple stock for $200, but at what cost? $200? Not really. Let's shift the equation. Okay, the Apple stock is priced at the dollar level in 200 numbers. But what the dollar is priced here? The dollar is priced at one of the 200 number of the Apple stock. You need to look at this equation like this. There is a whole world which the dollar lives in, and that bond market. Like you are connecting the two different worlds in this transaction. One is a stock market, which actually gives the access towards the business world of an economy. You are buying businesses here, but one is the side is the dollar, which actually connects to the bond market, which is a different kind of variant in its own. So you need to look at this perspective, and this actually happens again when you're selling the Apple stock. You are again connecting two different worlds. So you need to look at this whenever you're buying an asset. You actually need to understand the value you are giving for that asset. A dollar is not a dollar is the same in the future. It depreciated. It may get appreciated for a short term, but it just get depreciated generally over the time. And you can say that the inflation is the something that actually do this, but that's not all. There's something other than this, and that's the interest rates. The basis of the bond market is the interest rates. It's the yields on the bonds, the government bonds, the sovereign bonds that you get. There's a whole yield curve, the duration timelines, and these all kind of concepts. You can Google that, and you should need to understand those concepts to actually price your dollars, to actually find a real value of your dollars that you are trading for a financial instrument in the stock market. The stock market gives you access to the businesses, and the businesses have their own levels of risks. These are the riskiest investments at the institutional level. One thing you must look at is that if the stock market is something that is riskiest, you are thinking about the value of your money, which is dollar, is less riskier. And yeah, it's less riskier, but not less riskier than the commodity, which is gold. Like there are three levels of the risk I can generally gauge here. One is the upper level is the equity investments. The middle level is the dollar, the currency you are trading, and the lower level of the risk is the gold. You need to understand that you trade the dollar, which is in the middle, which is the currency for both of these kind of investments. To understand the risk perspectives, when the economy is more riskier, you go towards the gold. When the economy is less riskier, you go towards the stock market. And yeah, these things actually reflect in your investments. One of the bond investors are demanding the higher interest rates on the bonds of a certain currency. That means that your currency is actually devaluating at the same time. That does not hold the same kind of value at all. If you think about the inflation perspective, then the inflation is something that has its own indicator. That's the CPI, and that is a lagging one to understand the investments. But if you talk about the interest rates and the yield curves, that are the more real time, and it affects the stock markets at the real time. Inflation data can take maybe a month or a quarter, to get the realistically aligned. But the interest rates data, the yield curves are just real time numbers that actually tells you what the economy is worth right now and what the businesses in that economy will be worth and will be looked upon how. Maybe I got too fast about it, but yeah, just needed to tell you that money has its own kind of price, and that is priced in the bond market in real time. That gives you some really big indicators of what the money will be priced. The bond investors actually demand the interest rates, and the interest rates actually reflects the value of money. If the money will be priced lower, then the businesses of that economy, the currency, is also going to be lower. The history has numerous examples. Whenever the stock market crash happen, the bond market is something that is involved at every level. Let's give you a mature example. Whenever a country buys large scale bonds and at a very big level, that actually lowers the yields on the bonds. Why? Because the demand is high. Obviously, this is an artificial demand. This is called the quantitative easing, but the demand is there. So whenever there's more demand of the bonds, the yields just generally get lower. And when the yields become lower, that means the investment risk is just shifting here, that the investors are now getting the lower yields. So they are going to the stock market investments to get better yields, better returns. The country, the government actually uses the bond market to actually reprice the other assets. The reality is just shifted because of the bond market. So I think you got the point how the bond market actually plays a very big role in other asset classes. So subscribe to my channel so I can put up more stuff like this. Bye.